Hello, everyone, and welcome back to Stock Market 101, the podcast that keeps you ahead of the curve in the U.S. stock market. I'm FX Videos, your host for today, bringing you a deep dive into this week's market events and what's likely in store for the week ahead. Buckle up, because there's a lot to unpack. Let's start with a quick recap of what shaped the markets this week. The major indices showed mixed performance over the past 5 trading days. The Dow Jones Industrial Average edged higher by about 0.5%, supported by strong earnings from blue-chip companies like, insert specific company, e.g. Boeing or Coca-Cola. On the flip side, the S&P 500 dipped slightly, closing down 0.3% for the week as tech stocks faced selling pressure. Meanwhile, the Nasdaq had the roughest ride, shedding 1.2%, as investors rotated out of growth-heavy sectors. Now, the Federal Reserve's latest meeting minutes released midweek kept investors on their toes. While policymakers signaled no immediate rate hikes, their commentary hinted at keeping rates elevated longer than the market had anticipated. This led to a notable rise in bond yields, which, as you know, often weighs on equity markets. On the corporate side, the healthcare sector was in the spotlight. Pfizer and Moderna shares dropped sharply following declining COVID-19 vaccine demand projections. But energy stocks provided a bright spot, with crude oil prices rebounding to nearly $85 a barrel after OPEC reaffirmed production cuts through the first quarter of next year. Turning to the economic front, inflation and labor market data grabbed headlines this week. The Consumer Price Index, or CPI, came in slightly hotter than expected at 3.6% year-over-year. Core inflation, which excludes volatile food and energy prices, also ticked up to 4.1%. This reignited fears that the Fed might not be done with tightening just yet. Meanwhile, initial jobless claims fell to their lowest level in 4 months, signaling a resilient labor market. While that's good news for job seekers, it raises concerns about wage pressures fueling inflation further. Earnings season also continued to dominate, with 68% of the companies that reported so far beating Wall Street estimates. But forward guidance is where the narrative gets shaky. Several CEOs hinted at slowing demand in sectors like retail and tech. Let's break down some of the week's biggest movers. In tech, Apple and Microsoft saw declines as analysts raised concerns over stretched valuations. Tesla, on the other hand, gained nearly 3% after announcing record deliveries for the fourth quarter, despite the headwinds from rising competition in the EV market. Retailers were a mixed bag. Target posted weaker-than-expected sales, citing cautious holiday spending trends. But Walmart bucked the trend, reporting solid growth in grocery sales, which lifted its stock by 2.5%. Financials had a strong week, with JPMorgan and Bank of America benefiting from rising interest rates. Their higher net interest margins were a big driver here. Alright, let's talk about what's coming up next week. First, keep an eye on the upcoming retail sales data scheduled for release on Tuesday. This will give us a sense of consumer strength heading into the new year. Economists are forecasting a modest 0.2% increase, but a surprise on either side could spark volatility. Next, the Federal Reserve's Beige Book will be out on Wednesday. This report provides anecdotal data on the economy and could offer fresh insights into regional economic activity. Earnings-wise, several tech heavyweights like Netflix and Meta are set to report. These results will likely shape sentiment across the broader market, especially given the tech sector's recent pullback. Finally, Friday's Producer Price Index, or PPI, will round out the week. If we see higher-than-expected numbers here, it could reinforce concerns about inflation sticking around longer than hoped. Now, let's discuss strategies and potential stock picks for the upcoming week. With rates likely staying elevated, defensive sectors like healthcare, utilities, and consumer staples might be a safer bet. Companies with strong balance sheets and consistent dividend payouts can help cushion your portfolio against market volatility. On the other hand, if you're willing to take on some risk, look at beaten-down tech names that have strong fundamentals but saw recent pullbacks. Think of companies with robust cash flows and growing market share. Lastly, for those interested in commodities, energy stocks could continue to benefit from higher oil prices. However, be cautious as geopolitical risks could add to the volatility in this space. And that's a wrap for this week's episode of Market Pulse. Thank you for tuning in and making us part of your weekly routine. If you found this episode insightful, don't forget to like, subscribe, and share it with your network. Before we go, remember, the market is full of opportunities, but it's also a place where preparation meets patience. Stay informed, stay strategic, and you'll always have the edge. I'm FX Videos, signing off. See you next week with more market updates and forecasts. Until then, trade wisely.